last minute.
That's good.
Excited to chat.
All right. I'm joined by Dylan LeClair, Lyn Alden, and Checkmate. Do you go by Checkmatey or Checkmate? I'm
It depends. So Checkmate was taken when I made my handle, so I had to adopt a more pirate-like name. It allows me to, be a little bit more liberal and free, but that's good.
Right on. All right. So I'm here in Cape Breton Island. I'm on vacation for the last month, and I've been disconnected a little bit from the internet because my Starlink doesn't have a clear view of the sky. So I can't go on Spaces. I'm out of the loop on Clubhouse. And then when I'm traveling back and forth to take care of some properties I diversified into for my family members, just not able to fully plug into the conversation. So I've been kind of like only spending 4 hours a day on Twitter instead of 12 the last month and a half. And I feel like I need a catch up. And there seems to be so much happening in the last month, and especially the last few weeks, things that a lot of us have kind of predicted and called out in the past are risks for crypto and Ethereum. And I would love to just have a conversation about censorship, centralization, stablecoin risks, the cultural differences between Ethereum and Bitcoin, and whether or not there's redeemability in the kind of things that DeFi folks are trying to push forward with Web3 and stuff like that, and if Bitcoin should have this stuff. And thank you, Dylan, Lyn, and Checkmate for joining. Now, Checkmate, you had an interesting proposition, so maybe you want to explain that and see if we want to do that for
sure.
this discussion.
The thing that I think the best take of this whole Tornado Cash saga, as it often does, comes out of Matt Odell, where he basically says that this whole shitstorm is a result of the government changing a blog post. But it kind of shows you the magnitude of the thing, right? It doesn't take a lot to disrupt the state of play. And, a lot of these risks have been talked about. And, of course, I'm not going to profess that I understand them all, but it's a complex beast, and understanding all the different facets, both at an engineering, social, all those different levels, it's hard work. But anyway, the kind of framework that I've been trying to come at this from, and it's one that I don't see talked about very often, is essentially, I mean, if we're going to talk about the Ethereum proof of stake merge, right, as a room full of Bitcoiners, let's remove our bias from this as best we can. And the best way to think about that, in my view, is to say, okay, Ethereans are correct. The fee market for Bitcoin is insufficient. Bitcoin's dead, right? Here's our base level. So now we've just got Ethereum, who's the market leader. We all have to rely on it to be the decentralized future. We all put our biases to the side. We have to transition from Ethereum proof of work to Ethereum proof of stake. That's the transition. So let's not go worrying about where the Bitcoin ASIC farms, and I don't care about Hut 8 because they're publicly traded. What we care about is Ethereum proof of work to Ethereum proof of stake. And is that strictly an improvement or a downgrade of the overall centralization, censorship resistance, essentially the properties that we Bitcoiners would want, considering our beloved Bitcoin is dead? We need to essentially make sure that those properties are carried forward in the next best thing. So that kind of debate framework, I think, is interesting because it just helps us, it separates the Bitcoin world. It doesn't become a Bitcoin versus ETH debate. It's purely a proof of work, proof of stake. Which one is more decentralized? Do we achieve that end goal?
I like that framework of thinking, except I'm not sure I can get myself into the world of I would be involved in cryptocurrency at all if Bitcoin didn't exist. I can try it. I think I would definitely be trading and like trying to make money in crypto and DeFi and stuff like that, but I wouldn't be like a passionate Bitcoin activist that's like trying to change the world and fix the money if I knew that a system like Ethereum was the only thing we had, just based on the values of, like, when you dig down into how the system is controlled and how governance happens, and there really is no censorship resistance in the end. So
I guess that's the thing that you want to unpick, right? So I guess in order to have an effective debate and steelman this thing, try and work out, is that statement you just made correct? Is it actually capturable? Is the governance layer the bottleneck? Is it the stablecoins? Try and find what the elements are that essentially create that view in your mind. What are the elements of this whole system that actually get you to that phase?
I'm curious specifically to Lyn and Dylan to hear your thoughts on that premise, even because I remember I got into Bitcoin. It was 2011. I was a super young guy. I was passionate about like the idea that you could just mine Bitcoin with your computer. So part of me was attracted to Bitcoin because of the FOMOnomics. It was like, wow, I can just make magic internet money by plugging in my gaming computer. That's exciting. But it was also the investment thesis. And like, I want to hear your two perspectives. Lyn, do you want to go first, guys? I know you cover this stuff mostly from an investment, like a fundamental investment perspective, and you analyze a lot of things, not just Bitcoin. Like you're very good at analyzing markets and gold and things like that. So curious your thoughts on the premise of like, would you have gotten involved in cryptocurrency if Bitcoin didn't exist? And can you get yourself to the point where you can steel man that case of Ethereum being the only thing that exists?
I probably would not have gotten into it anywhere near to the same degree without Bitcoin specifically. And it comes down, I think, there's basically a handful of different things that result in something being truly censorship resistant, centralized or not. Part of it is the whole proof of work versus proof of stake thing, but then it also comes down to the ease or difficulty of running a full node. That's another thing that came up recently regarding Ethereum's design, is that if it's hard to run a node, if there's low percentages of running nodes, which is technically true for both ecosystems. Not many people run nodes, but it's much less so in Ethereum because it's much harder to run a node, and so they rely on these external node infrastructure providers that are in the cloud, and then can just censor whatever they want. And so for anyone other than a power user, Ethereum's already essentially centralized, and the threshold for being a power user is higher in Ethereum than in Bitcoin. And I think it's probably going to that divide's probably going to grow over time. I mean, you can imagine 10 years of this. How more complex would it be to run an Ethereum node than a Bitcoin node? So there's that aspect, and then there's also if the blockchain is inherently designed to do something else. So Bitcoin is inherently designed to be pretty much self-referential. You can build things on top of Bitcoin, but the primary purpose is not to do that. Whereas in Ethereum and smart contract platforms, and I have steelmanned the reason for their existence. I've done that in a number of pieces, both my Ethereum piece and then my proof of stake piece. So I've kind of explored, steelmans for why smart contracts are useful. But if the hard money blockchain is also inherently a smart contract blockchain, I think you have a kind of a fundamental divergence because you open it to be capturable in various ways. You open up the stablecoin centralization problem, where one or two stablecoin custodians can effectively determine the outcome of hard forks by breaking the DeFi, whatever side they don't pick. And number two, you introduced, minor extracted value or maximal extracted value, which is just inherently more centralizing and complex. And I haven't gone down that rabbit hole to the same degree that say Alex B has or Nick Carter has. There are people that have really, you know, dived into that, but I understand it enough to see how centralizing it is. And so I think the fundamental issues are not just proof of work versus proof of stake, and it's one of 3 or 4 different issues.
Yeah, to piggyback off that, and I think a lot of my kind of thesis around Ethereum and the proof of stake and all of this has been built on kind of Checkmate, Lyn, Alex B, like the people that before I even knew what MEV was, right? I was just kind of a curious Bitcoiner trying to understand these systems. These guys are really picking it apart. But I think on the basis of Ethereum, what you have to look at is and the whole DeFi ecosystem. We saw the explosion of DeFi summer in 2020, right? And decentralized finance is a great word. It's a great buzzword, blockchain, decentralization, right? But when you kind of dig into it, the whole basis of it, of borrowing and lending, right, is on the back of the centralized stablecoin infrastructure. And even the decentralized stablecoins, we saw Luna blow up, right? DAI is essentially 55, 60% USDC, right? So that there's no decentralization there. Over collateralized stablecoins are possible. Decentralized stablecoins are possible, but they're not efficient, and really there's not much of a market demand to kind of over collateralize, and it puts the users that are putting the collateral in to risk of a margin call or a liquidation, right? So that's not very ideal. So this whole ecosystem and the kind of the decentralization of it is really more of a farce than anything. It's more of, I think of it as like a regulatory arbitrage. I can't spin up a derivative exchange or a borrow and lending desk with ETH or Bitcoin as collateral without jumping through a ton of hoops. But I can, fork a protocol and build something where you deposit your ETH into a smart contract and you can borrow against it, right? And so that's kind of what we saw, I think, over the last couple of years, really with the explosion of all of these protocols and borrow and lending and DEXs and all that. And really a lot of it's just kind of, speculation. And so I differentiate Bitcoin and everything else because I think there's a pretty big problem in the world. And this is like a little off topic from the ETH thing. But the problem is like the cost of capital is completely toast. The money's broken. And I think my personal thesis is that we found an engineering solution to it with Bitcoin, right? Like someone discovered an engineering solution. They solved the double spend problem. We got absolute scarcity with proof of work and the combination of the difficulty adjustment. We did it, right? And like as simple as it is, and it's a pretty big idea of we potentially solved this thing, and the total addressable market for money is bigger than everything else. So you can build your Rube Goldberg machines on a blockchain, but like kind of convoluting that with like, hey, this is a gas asset, which the market has shown that gas assets have some sort of value. Is there a terminal value there? Is it lasting? Is it fleeting? I don't know. But to say, okay, this is a gas asset and it's ultrasound money, and like the things that the Ethereum community has done, as Lyn and Checkmate have pointed out, to make it, to kind of garner more of that monetary premium. I think that's where you start getting into kind of a sort of logical fallacy and something that's, it doesn't have as much staying power as a lot of people think.
It's basically diverging and trying to be too many things at once. And as with everything in engineering, there's trade-offs. So if you try to be the monetary asset, the store of value, then you're going to benefit people who hold it today way more than you're going to benefit them in the future, right? And we see things with EIP 1559. I made this mental model the other day on a podcast. I've been thinking about it for a long time, but my general conception of it is that market cap is probably your best, if you're going to give it a metric for value created for society, market cap's probably right. And it's different to price, because price is whatever. 42 coin has a price of 200,000, but it's complete shit. So it doesn't really matter that it's worth a lot in terms of price, because the market cap's worth nothing. Now, with a burning system, price goes up 10%, but you could burn 10%, which means that you didn't create any value because your market cap is sideways. You didn't generate any value for society, but the people who are already holding that token got richer because the price went up. Price went up, value went sideways. You could, in theory, have price go up 5%, a big gas day, and it burns 10% of the supply. You actually destroyed value, but the token holders got richer. So play that scenario out for a long term. Just the fact that kind of decoupling between market cap and value is there kind of signifies you can destroy value whilst making people rich. And it becomes almost like a last man standing type problem, where the last guy to sell his ETH is selling it for $6 million because there's only 42 coins left, assuming exit liquidity. But essentially the price goes up, but you didn't create value. So it's actually broken that separation between value for the network and people, society, and price, which I think is a really interesting long-term divergence. It just kind of illustrates that there's just a misallocation of balance of wealth here.
Yeah, it's almost like there's a double whammy on the Gini coefficient for Ethereum with the EIP 1559. Not only with switching to proof of stake makes it so that the rich get richer with no extra work, but you also have the stakeholders getting a larger percentage of the supply by just sitting there and doing nothing. The free rider problem is something a lot of Silicon Valley folks like. Actually, I call it the free rider fallacy, because they believe it's a problem with Bitcoin. They think, why am I going to go do work on Bitcoin and enrich all the holders who are just sitting there doing nothing? So that's a common thing to like be aware of in a business where you got a cap table. But Bitcoin is a money. The BTC asset, you actually want that to be distributed as widely and fairly as possible, so that you can have a better Gini coefficient. But with a blockchain system based on proof of stake, it does actually, unless it actually gets the Lindy sort of benefits of Bitcoin, and it actually has the brand awareness of Bitcoin, and in this world that you're proposing, Checkmate, of where Bitcoin didn't exist, maybe in a world where Bitcoin doesn't exist, ETH becomes the money and the gas, and then it has a okay Gini coefficient because enough people flock to ETH, the asset, to hold as their money and to use on second layers or side chains or whatever, because then the fees will be lower for them. But in a world where Bitcoin exists, it's got much better long-term credible scarcity. It's got a much more resistant monetary policy. I mean, every time Ethereum changes their monetary policy from EIP 1559 to the proof of stake, every time they do that, they're resetting the clock on days since, scarcity has been interfered with. And yeah, it does seem like a double whammy, but I could see in a world where Bitcoin didn't exist that wouldn't be a problem, but like Bitcoin exists, so it has to be factored in.
I don't think even like the moral case of like, oh, you're enriching the stakeholders is maybe not, that's not effective. But like, that sounds attractive. Where like, oh, proof of stake and it enriches the stakeholders, and it's like, okay, from someone on the outside, they're like, hey, maybe I should just participate. I think more so when we're highlighting the flaws of proof of stake and Ethereum and ETH 2.0, it's saying, okay, well, look at the centralization of stake and look where the kind of the power structures have shifted from, okay, block production, the fees to use ETH, to use the ETH network are paid with ETH the gas asset. The fees and the issuance go to the miners. To now at proof of stake, the capital is where the block production occurs, and that's all centralizing in a huge way. So you see Coinbase, Binance, the centralized exchanges are taking a huge share, but the biggest share, and this is really kind of the puzzling part for me from an outsider looking at it, is the fact that withdrawals are not enabled in the system. So it incentivizes currently, and I guess there's a roadmap for that, but the code isn't shipped yet. So this incentivizes liquid staking derivatives, right? So now Lido has this massive market share, right? And with a lot of these DeFi protocols, right, they have they have like social governance and they have governance tokens. Well, if you look at Lido, who has, I think, off the top of my head, it's around a 30% share of all staked ETH. They have a massive amount of staked ETH. And it's, kind of similar to like, say, like a Grayscale mechanism where you bring GBDC, you bring Bitcoin to Grayscale, they give you GBDC, but you can't redeem it. You can't redeem it now, at least for ETH. Eventually, the proposal is that you can redeem that back for Ethereum from staked ETH to ETH. But you have all the staked ETH, and Lido has a governance token. And really going back to Alex B, when he put out this thread last July, I think, about how Ethereum is, excuse my French, fucked. He talked about minor attractable value and the centralization effects of Lido. And the Ethereum Foundation, I believe it was Danny Ryan, basically summarized his thread and his findings in an official post on the ethereum.org website. And it's basically, almost paraphrased it and said, one of the only things we can do to stop this is having the Lidos of the world self-cap how much stake they can have. Well, it turns out just last month, I think it was June 24th to July 1st, there was an official vote. Lido, LDO, the governance token, had a vote to see if they would, cap their stake. And the vote was a landslide, 99% to 1% vote to not cap.
Oh, really?
99%. And if you look at, and shout out to Glassnode for these stats, if you look at the actual supply concentration of Lido, of the Lido token, LDO, 95% of the tokens are in the top 1% of addresses. And it's basically just to seed around investors, right? A16Z, all the kind of altcoin VC firms, right? So the decentralization here is decentralization theater. And really ETH has a massive centralization problem. And I think where Checkmate, and not to talk for him, but where Checkmate's getting kind of agitated as an ETH holder is he's saying, hey guys, like dispel my worries here. But no one is giving him any good answers. And from someone that doesn't hold any ETH, as an outside observer, is pretty puzzling.
It's a funny one because it is the layered problem, right? So as far as I understand, they've got basically two solutions to this problem. So to summarize the problem, there's obviously a lot of stake that's on Binance, Coinbase, and Lido. Expectations is that that's probably going to persist. So much like a mining pool, in theory, the best option is for people to get out of those staking pools and basically reshuffle, right? Become a self-staker. Now, the solution there is to basically ship the withdrawal code ASAP so that people can, in fact, do that. Point their node to a different mining pool. That's 6 to 12 months away. So to me, the engineer is like, all right, why don't you ship that code, delay the merge, ship that code, get this problem done. But then the rationalist in me goes, well, people aren't pulling their coins off Coinbase because people they went there for a reason because they want the convenience. So even if they were to do that, which is, in my opinion, the prudent engineering decision, Even if they did that, I don't think it'll make any kind of difference because people want convenience anyway. So therefore, the next layer to this thing is you've got this situation where it is potentially capturable. And their defense is essentially a user-activated soft fork. And this is really the most interesting part. And I spent the morning listening to the All Core Devs call from yesterday and, trying to digest what they were talking about. And there's 40 minutes in, they're basically discussing that and more or less confirming, unless I misunderstand, but I believe I understood what they were saying. They're basically saying that indeed the rules are not written to what is censorship. And they're concerned that the developers probably have to put forward a set of guidelines on this is when we will and will not release code that will slash Coinbase. But they also recognize that puts them in a position of we get to dictate. That's also subjective, right? We get to dictate who slashes and when. But then what I tried to capture in that video is that that's all well and good. You've got the 33% of stakers, the bankless guys, the people who've been staking for a long time. They've been in ETH for 5 years. They've got plenty of 32 ETHs. And they're probably solo staking. But little Timmy's over there on Coinbase, who's got 2 ETH, that's a big investment for him. He doesn't have 32. He doesn't have the technical know-how. And in many ways, that 68% of people who went for convenience probably represent the masses. The 33% represent those who were early adopters. So you've now got a case where the early adopters, rightfully so, will align with the devs who want censorship resistance, which is totally fair and noble. The problem is you're going to slash the 68% to achieve that goal. So you're going to slash your investor base. It's not like proof of work where the miner who goes on a different fork, they self-immolate, right? They burn power on a fork that doesn't end up being the real chain. They've burnt the power. You can't get that back. Stiff shit. In the proof of stake system, you essentially take all those little Timmies who didn't have an opportunity to be, self-staking and all the rest of it. You're slashing them. And then there's the other layer on top of this, which is, okay, Mr. 33%. You think you're going to slash Coinbase, you're going to write the code, release the rules. What happens if Circle says, sorry, we have to follow this chain over here? What if all the dApps, as we just saw with Tornado Cash, by the government changing one blog post, what if they all say, sorry, we're with Coinbase? Who is the minority fork here? To me, this actually looks like a chain split, and a chain split that's potentially irreconcilable because the 33s, right, the guys who are in the 33%, Coinbase may well slash them. Right, on their chain. They're going to slash Coinbase on their chain. The devs go in one direction, the investors go in the other direction. Circle blows up on one side, DeFi implodes. Like, what's consensus? And the problem is you've introduced human subjectivity in politics. And where I challenge the Ethereum community is saying, why don't you not have the nuclear option as the first thing in your toolkit? Why don't you deal with all the problems before you need to pull out the atomic bomb? Because basically what you're doing is you're holding it up and saying, we'll use it. But it's like you kind of don't want to need it at all. You want to engineer that problem away because it's all well and good to posture on Twitter. Try doing it in the heat of the moment. I don't think it's
even a serious thing. I think that's just like Eric Wall and others just kind of like shit disturbing, stirring the pot.
I think it's posturing. I think it's more posturing than anything else. And I get it. And that's what the developers are saying too. Like, we need to put out a credible threat to Coinbase. It's like, but Coinbase may not have a choice. They can't evade sanctions rules.
The like precedent has been set going back to the DAO that there is the ability to suspend immutability in Ethereum, and Ethereum is governed by the Ethereum Foundation and the early pre-mine folks at Ethereum. They do a really good job of trying to rack up days on that board of like days since interference with with governance. But like when they let the parity hack play out without rescuing Gavin Wood and those guys, that was kind of like a choice they made to allow immutability to persist for a little longer because it wasn't a big enough problem. But it still doesn't change the fact that the precedent has been set that there's like, you just follow what everybody that's in Ethereum, the culture is not run your own node so that you can like be a resistance force or a threat to potential censorship. The consensus and is like, we're just making money and we're doing DeFi, we're building really interesting smart contract decentralized finance applications, but we're not really involved in governance of Ethereum, and they're going to take care of that. So I don't think that the user activated soft fork is remotely credible at all. I think it's just kind of a narrative on Twitter for people to just kind of like throw flags in their names and stuff. But Lyn, do you think that, I don't know if you follow the Ethereum development much enough to comment on this, but like, are you steeped enough in the like the history of the changes to Ethereum's code to like know whether or not you think there's a credible threat of a user activated soft fork in Ethereum, or are you sort of like paying more attention to the investment side of things and like stable coins and stuff like that?
Well, I think they might attempt it if it came down to it. I think that, as Checkmate pointed out, you don't want to have to rely on that. So I don't completely, discredit that they might attempt to do that if they actually get hard censored. Other than, because a number of them have now said publicly, if Ethereum gets censored, then it's a failed project. And so if you're going to either abandon the project or try, a split attempt, I wouldn't be surprised to see them try that. But I think at that point, the damage is pretty done because you're slashing, the Timmys. Checkmate already described that well. One thing I observed when looking at the history of Ethereum is that you generally started from a position that was not hard money, and then on the surface tried to harden it, not by actually hardening it, like not doing things like removing the difficulty bomb and things like that that actually make it immutable, but instead trying to make it more deflationary and basically equivalenting deflationary or disinflationary with hardness, which is not quite the same thing. Because, for example, Apple stock is an outright deflationary unit, right? So it buys back more shares than it issues. And so if you look at Apple's shares, for example, they've gone down from 26 billion to 16 billion over the past 10 years or something like that. And so, but no one would call that sound money because the key thing is that they always have the option to change the number of shares if they really needed to for some reason or another. And so with Ethereum, you've started from a position where you had higher issuance, and then they made decisions to reduce issuance, and then they do EIP 1559. We're basically in some ways purposely making the protocol less efficient in order to burn more ETH, and that works up until you start to get kind of market share dilution of smaller users going to other blockchains. So you see,
Right.
for example, people that want to transact in stable coins outside of DeFi, if they're actually, say, in Argentina and they want to hold some stable coins as like near-term savings, they'll often use Tron rather than use Ethereum in order to save on fees. You see some DeFi spilled over onto Solana, Avalanche, other platforms. Unfortunately, Luna as well. So you have that kind of spillover effect. That's stalled now that it's in a bear market and fees are lower. There's less of a reason to spill over. But if you were to hypothetically get another raging bull market in a high fee environment, you probably would see more dilution. Whereas with Bitcoin, they've gone in the opposite direction where they started super hard and immutable, and then all of the soft forks they do are to try to make it more efficient, right? So SegWit, basically reduced fee pressure. Taproot can also reduce some fee pressure. And the reason I'm not that worried about Bitcoin eventually getting a fee market is because the block space is inherently limited. And so if adoption goes up 5x or 10x over the next 10, 20 years, you'd expect a pretty high fee market. Now, if Bitcoin does not ever develop a substantial fee market, that inherently means that there's just not a lot of demand for block space, which I think is a bigger problem than just the fee issue. That probably would mean you had an adoption failure of some sort. So I think that in general, the concern trolling around Bitcoin's fee market, I think, is premature. If there's no fee market even emerging in like 7 years, by the end of this decade or something like that, I think those discussions become, more credible. But in this early phase, especially because Bitcoin is inherently a lower velocity type of asset compared to a smart contract chain, I think that it's just, I don't think that's the main reason they did the switch. I think that's something that they use to try to make, and strengthen their argument, but I don't think it's actually the catalyst.
I agree. And just kind of touching on the fee market, there's a couple of things, when people bring up the fee market, at least from my perspective, I look at the empirical evidence, which is that mining revenue, even at the bottom of this bear, is up 300% since the halving, right? Post-halving. So there's that element. There's also, is Bitcoin closer or further away than a reserve asset than 2 years ago? I would argue it's probably closer. just simply because it's up, 300% from where it was. So you've got that element. And then there are going to be other mechanisms, over time you start seeing, as Lyn said, there's more efficiency gains, right? Lightning Network is going to eventually reach some kind of use case, right? We're going to start seeing more things get built on top of it. There will be more settlement transactions. You start seeing all of these things. And also there's mining costs come down, right? Grid stability and all those additional economics. So it's actually winning from multiple fronts. The price of your power comes down. And the last one is that the subsidy is doing exactly what it's supposed to do, which is subsidizing the build out. I was in a conversation the other day with NVK talking about, essentially Bitcoin has bought a whole army of ASIC miners. Now, if anyone wants to go and attack it, you need to go and produce all of those ASICs that Bitcoin's basically paid for in the past. The CapEx is already expended, but you've got to expend it up on this front face. You've got to get through everything from the chips. You've got to get through, production costs, facilities. You've got to get another small country worth of power. You've got to probably build the nuclear reactors to actually power this thing. It's a big undertaking. There's probably not even enough foundries. You've got to spin up a couple of foundries. There's a couple of $100 billion in 10 years. So it's a big undertaking. So in many ways, even if the fees were less than expected, most of the build out has essentially been paid for already by the subsidy. The subsidy did its job in essentially building out the infrastructure that then needs to be replicated. And for it to be profitable, you essentially need to be doing it on the current fee revenue without all of the subsidy that's come before it. So there's a number of layers there, but I would tend to agree. When you kind of look at the big picture, it's much, much closer to having a fee market than not. The probabilities, I believe, favor that it will. There's just a lot of elements there that often these debates don't capture. Because it's easy to look at the price chart in a bear market and say, look, fees are low. It's like, okay, but there's also a lot of stuff going on the other side.
I think it's also interesting to look at just how, if we're talking about censorship at the base level, just like running through thought experiments of, OFAC compliance, right? And again, like I am in no means in favor of any of this stuff. I would say I'm probably more, libertarian, anarchist, anarcho-capitalist at heart. So like not cheering.
Yarr, matey.
Not cheering any of these things on. I would just say, thinking adversarially is certainly something that when you're trying to overtake or take the means of production of money back into your own hands, it's certainly something that's probably you should be doing. And so if you think about ETH versus BTC, well, right now about like 1.5% of miner revenue comes from fees. Well, we know just from the protocol that's going to approach 100. So Bitcoin actually, from kind of a miner level, from a block production level, gets more censorship resistant as the protocol goes on, as each subsequent halving happens. Because there's I think there's this confusion of like security budget, when really security is something that individuals pay for. You pay for it yourself, and you pay for that with your fee, right? If you don't want your transaction to be censored, then jack up your fee, and someone will mine it because they have an economic incentive to do so. And so, say just for instance, OFAC comes in to the centralized exchanges and says you can't use, you can't mine or validate these or build on top of these, ETH OFAC non-compliant transactions. And they go to the mining pools, and even though the miners, the publicly traded miners, are just pointing their hash at a pool, they make them, in a thought experiment, they make them use some OFAC compliant pool, right? Well, all the miners that aren't using this OFAC compliant pool are going to get an increasing number of blacklisted transactions with higher fees, right? Because the people that transacting won't have another choice, and they'll need to pay up. And over the long run, especially as the block subsidy goes towards zero and fees as a percent of miner revenue approach 100%, then there's like a distinct competitive advantage that these non-compliant black market miners will have over their compliant mining peers, their compliant mining competitors. And so I think that's something that over the long term, and this isn't next year, this isn't even next halving or the halving after that, but just when the block subsidy is literally non-material, Bitcoin is still going to be very, very censorship resistant by design, because individual users, individual transactors pay for their security.
And I think you actually raised a really interesting point, and kind of bring it back to the original case of why you argue ETH proof of work versus ETH proof of stake, because that's the transition they're making. A US miner, go ahead, go and sanction Marathon and Hut 8 and all these publicly listed companies. The miners over there in Venezuela will be just fine, right? They will gladly mine your block. So then you come into the question of jurisdictional risk. And this is a case I don't see many people arguing, but where are the Ethereum miners? Because their jurisdiction matters, because we know that all of the staking pools are Coinbase, Binance, regulated companies, right? Lido, USVCs. This is a crux of the point in the thesis that I tried to lay out, which is that we kind of know that the jurisdiction is singular when it comes to staking pools as it stands today. There's also a whole layer of technicalities, which is that, validators are not like miners. Miners just build on top of the block. Validators actually literally attest to the blocks that came before them. So there's like an additional level of, well, you're kind of signed off on that block over there. So the degree of you must censor this particular behavior, I think, is more relevant for proof of stake, but it's also relevant for both. But the question really becomes, where are your ETH miners? Where are all those GPUs whirring away? And most of the time,
where they are? Have you looked into it?
No, I haven't. I need to, actually, but I kind of probe the Ethereum crowd and say, can you tell me? Because what you're basically doing is taking a jurisdictional risk of the fact you don't know where they are probably means they're pretty decentralized, to be honest. The fact you have no idea where they are is a good sign. So because you don't know where they are, your jurisdictional risk is all over the place. You could very well have miners in China who will gladly mine an OFAC sanctioned block because they don't even care. They're not looking at it. It's not part of their
and you're saying so that adds extra risk on stakers
because it's essentially a single jurisdiction. Coinbase can't do it. Binance can't do it. Lido can't do it.
But would that be a problem though? If they're moving off proof of work, then wouldn't that be no longer an issue? If they're
You're essentially no. So your miners, because you don't know where your miners are, you've got jurisdictional diversity, right? You've decentralized your jurisdiction. So if US miners are all sanctioned, that's fine, because miners in every other country who don't care about their sanctions will mine away.
Gotcha.
But what we're saying in proof of stake, and this is why I challenge them to say, you are strictly going, forget about Bitcoin ASICs, ignore them. They're not relevant to your case. You're going from a bunch of GPUs, there are ASICs out there, but you're going from a bunch of GPU and ASIC miners to a system of single jurisdictional capture, which we know ahead of the merge. Like, we know that this is the case today, and we don't know where your miners are, right? Chainalysis might know where they are, but not many people do. So that's the distinction that a lot of people aren't crossing that bridge. It's saying, are you strictly improving your situation in terms of censorship resistance? Technologically, there's things like, flash bots and MEV. You've also got, can they attest to certain things? Like, there's all these ifs. And I think Miles Suter had a really good point. It's like, I can't believe we're going into the merge with all of these ifs still out there, right? They should be, no, this is how it's going to work. We have absolute certainty, and this is how it's designed to work.
Well, have you seen the roadmap? You've seen Vitalik's roadmap, where there's like 50 different things, and with all of them have different progress bars, and most of them are like a quarter of the way through. And things on his roadmap are like advanced cryptography, and it's like a 1/10 of the way through. I'm like, that's the roadmap? Like, seriously? That's crazy. It reminds me of that meme where Donald Trump hands the reporter his plan, and the reporter's, it's the 4 blocks, and the reporter's just like, huh? Like, what is this? That's what most people see when they look at that. But I guess if you're an Ethereum and you're like, wow, look how advanced this trajectory is. Look at all the marketing events that are yet to come. If we can achieve every single one of these things, that's another pump for the price, because look what we took off the box. ETH 3.0 will be next, and it's just like, seems like it's nonstop marketing events. But speaking of the mining, now I think I realized too just now that one of the probably the biggest problems with them switching from proof of work and proof of stake that they didn't plan for was Ethereum actually caught a bid from capitalists to start proof of work mining, and in 2020, the situation was dire for Ethereum. Like, Consensus had to lay off tons of staff because of the bear market in 2018 and 2019. And there was a lot of stablecoin value, billions and billions of dollars moved on to Ethereum. And the proof of work on Bitcoin all through the bear market was just going crazy. It was like we were getting tons of new people wanting to mine Bitcoin, even though the price was down. The hash rate was continually going up, even though the price was down or sideways. So the proof of work strength of Bitcoin was obvious. It was just growing continually. On Ethereum, it was just nobody gave a shit about mining Ethereum. So much so that Consensus had to spend $20 million buying graphics cards in 2020 and sign a deal with AMD to prevent 51% attacks, because it got to the point where it would have been not that expensive to 51% attack some blocks on Ethereum. So Consensus tried to prevent that from happening by signing a deal with AMD in June 2020 to like make sure there was not going to be any problems during the switch to proof of stake. Well, that's when DeFi Summer ended up saving Ethereum and saving the fee market, because miner extorted value became a really profitable thing where you could front run people. And it's like this dark sort of pathway through the forest where you're just getting constantly mobbed by reverse Robin Hoods. They can see what's in your cart and they're like, I can make money by just front running you and stealing your value. That became extremely profitable for people to mine Ethereum. And it actually, I don't think they saw that was going to happen. And a ton of people started to mine Ethereum because it became extremely profitable with the DeFi boom. But they were so far down this switch to proof of stake that if they had have not switched to proof of stake, people would have invested long term in Ethereum mining, and probably they'd probably have Ethereum ASICs by now. You know what I mean? Like, why would you go and invest all that research and money into investing into Ethereum ASIC technology when you know you're just going to get shut off by the devs when they difficulty bomb you and you're no longer profitable? If they screwed that up, they had so much momentum that I don't think they thought they were going to actually get competitive with proof of work mining, but they totally screwed it up. And now it totally prevented people from investing into it, where they have tons of people mining Ethereum. And now, like, I know some Ethereum miners that are just like, this sucks. Like, I was making good money with miner extorted value. I mean, I like to call it MEV, miner extorted value, but sure, miner extracted value. But that is a serious thing that long-term game theory wise, adding on top of the things that you guys mentioned, I think they blundered it, because they could have had a significant foothold. They've got significant foothold with developer mindshare. The NFT bubble has caused a ton of celebrities to start using Ethereum and stuff. So they definitely got some significant network effects to the last bubble, but they did screw up long term on this proof of stake, proof of work thing, I think.
I think that one of the differentiators, and sorry to interrupt, Lyn, I'll keep it short, is like I think there's a place in the world for a smart contract chain to be a proof of work smart contract platform, right? I mean, there BNB, Solana, Avalanche, like all of these chains that are essentially kind of just copies of ETH's code with a little bit of with a little differentiator, right? Like what's special about it? There's already been proof of stake chains out there. Like this isn't something revolutionary, and maybe the code's different, right? And there's some different mechanism, and there's definitely a lot more mind share and bigger network effects with Ethereum. There's no denying that than the other chains. But the proof of work, the kind of the unforgeable costliness, if you will, like if we're thinking about money, if you truly are ultrasound money, well, money has production cost, right? And kind of the circular logic of just like, okay, stake your ETH and you'll get more ETH, and it's just number go up forever. I mean, maybe it works. Maybe the tokenomics, the Ponzi-nomics of it are fantastic. But I think that proof of work is really, if you're just thinking about like a digital asset, I mean, that's one of the biggest value props is like, yeah, it's a completely digital asset. It's just, these numbers that exist somewhere on this kind of decentralized database. But to produce that thing, it's going to take a lot of real world energy expenditure. Like that's one of the selling points, I think.
You were going to say something, Lyn?
Oh yeah, I was just going to point out that I mean, right now the largest Ethereum miner is censoring Tornado Cash, but you don't have a network-wide censoring of Tornado Cash because other miners can pick up the slack, right? So it's actually an example in action where proof of work is being pretty resilient to mining level censorship,
Right.
because you would need not only the majority would have to do it, but then you'd also need the majority to not even build on blocks that included non-compliant transactions. So you need that. It's a really high threshold to hit, and then you have to maintain that, because then there'd be some percentage of those, because the fee offers for the censor transactions would be high, and so it'd be encouraging. It'd be like a constant enticement to have, say, some miners in censored jurisdictions to kind of get some of their GPUs out, go somewhere else, and mine those non-compliant blocks. And so it's actually a pretty high threshold to permanently censor the network. And we kind of see it's not even a theory. We're just seeing it play out right now. We have some attempts at censorship, but it's censored at the bigger problems that it's censored at the node level in many cases, the node infrastructure level, and it's censored at the MetaMask level. And so for anyone who's not a power user, it's already censored, regardless of proof of work versus proof of stake due to other design considerations. And the proof of work is what's keeping it from being completely network-wide censored.
Yeah, I agree. And I think that's really the crux of this thing, which is that you can have all these layers. You can have MetaMask and Infura censoring transactions. You can have stable coins having fork choice. You can have all of these situations, which I would argue is in the application level. Now that's going to cause havoc, no question. Withdrawing from USDC is not going to be a clean process. It's going to suck for most people. However, you can get off it. Right? All these things can be solved by additional nodes, additional infrastructure. I see lots of people yelling about Rocket Pool. It's like, okay, well, that's great. Rocket Pool is 2% of your stake. When it's 20, come back and we can have a discussion. So it's good that you've got all these things, but there's the world in your models, and there's the objective reality that's in front of you. And I do tend to find that Bitcoin is focused on the left-hand side, where it's the objective reality. This is what the data factually is telling us, it has done for some time, battle tested in production. And then there's the model economy, which is here's what we think we can achieve with all these different changes. And the risk is that once you go to proof of stake, considering we know the jurisdiction of 68% of the stake, there's a whole lot of different questions over what is the actual fault tolerance for proof of stake. In the All Core Devs call that I was listening to, I can't exactly remember what the threshold was, but Vitalik himself was like, I actually can't remember. I need to go and check that number. So there's a number of thresholds. There's a 33% for finality. There's a 51% for one type of censorship. There's a 100% threshold for another type of censorship. And and in fact, BitMEX put out an excellent post this morning that documents the 8 different options. And actually, there's another topic I'll go into after this, which is also interesting. But the different forms of censorship that exist. And again, you just look at the battle tested in production. Are you going from a system that is resistant to censorship to one that we can potentially argue, even in model world, that is not resistant to censorship? And there's another interesting topic that I've been kind of toying with, which is let's put ourselves into the shoes of Coinbase. Coinbase is in somewhat of a Lane Reddick had a good thread on this. They're in a little bit of a no-win situation right now. So let's imagine we go to proof of stake, and then for whatever reason, the government comes in and says, all right, you need to, basically, we don't like this unregulated banking system. JP Morgan's in their ears saying, hey, can you get rid of this thing? So they then say, no more Maker, no more Uniswap, can't touch it, right? Any US citizens using it, you're done. So, we can all debate whether that's a feasible reality, but let's take that as an edge case. So now you've got a situation where Coinbase cannot mine any transactions or validate any transactions that contain any DeFi applications. What do? Well, they can't not comply. They can't mine those blocks because I don't think Brian wants to go to prison. So they can't go against OFAC sanctions. If they do start, so they can't mine on the block. If they don't mine or they do start censoring those transactions, then the community is going to slash them. So Brian's now faced with an outcome. You can either go to prison and your company goes down for revoking OFAC sanctions. You can get a 50% slash by the community because you mined on the censorship chain, which, by the way, the rules are not written. There's no kind of who decides these rules, what's censorship, what is it? So you're going to get slashed 50%. The other option is they can essentially take the inactivity penalty, which when a lot of validators, it's not just going to be Coinbase here. If they impose these OFAC rules, it's all of these entities. The more validators trying to exit at the same time, the smaller the door gets. So it's 6 per block, 5 per block, 4 per block. So the more people are trying to leave, the smaller the door from the concert hall gets. So all of these people are going to get slashed for inactivity as Coinbase tries to exit the queue, where they're also going to lose about 50% of their stake. So you've now got Coinbase saying, all right, this whole staking system, if the government, for any reason, and by the way, this doesn't just apply to Coinbase, this applies to an ETF, this applies to any regulated institution. If the government imposes any kind of OFAC rules, I can't avoid them. I can't mine on the censorship censoring chain because the community is going to take half my money. And I can't exit in size because everyone else will be exiting in size, which means I'll also lose half my money. And as a result, it makes it a very difficult, I can't quite see the investable case for ETH as the institutional bond when the risk is losing 50% or going to prison if you do it and anything happens. So obviously there's a percentage probability of that happening that they would assign for the expected value. But it's one of these scenarios where it's like you've put your exchanges, your ETFs, your institutions in a little bit of a no-win situation here. kind of makes it a little bit uninvestable when I run through some of those cases. Again, I may have some elements incorrect there, but it's something I'm studying and just kind of understanding a bit more about.
Lyn, do you got any thoughts on that from the institutional perspective of the risks of investing in ETH over Bitcoin?
So I think it's changed a little bit because of the ESG narrative, right? And so you know, I've a couple of years ago I made the argument that I thought institutional money would be less interested in things outside of Bitcoin. Um, and they've actually been more interested than I would have guessed. And it's actually because, one, they don't really care about the technical details. You know, they don't really care about decentralization. They care about arbitrage and things they can do with it. And I think for them, it's more about that. It's more about the regulatory risk, right? So it's like, you know, what is the security law around this thing? What is the sanction risk around this thing? Obviously, institutions won't touch anything that is sanctioned or has a high probability of being sanctioned. I think one thing that, you know, I wouldn't be surprised to see Ethereum get some institutional adoption if once it switches to proof of stake, because then they can really hammer home the ESG angle. I think that, you know, there are going to be entities like Coinbase and maybe BlackRock and some of these others that you know, are happy with it. But I think it comes down probably to more fundamental things. So, for example, if Ethereum does not optimize for scalability, it risks losing, you know, market share to other platforms. And then number two, if it centralizes and gets censored, then you lose a lot of the more, you know, kind of the elements that are kind of more cypherpunk in that community would want to, you know, go elsewhere. And so it's got to like thread that needle, which I think is a very, very hard needle to thread.
Talking about the institutional investment thesis for Ethereum, even Bitcoin, any cryptocurrency, really, any risk asset, I wanted to get Dylan to weigh in on this. Like, I've been just kind of feeling a little bit of unsure about what's going to happen over the next 2 years or year, whatever, with all the craziness going on in the world. And, you know, we're potentially in the beginning innings here of a balkanization of the world's reserve currency and the world's reserve asset. Like the U.S. Treasury right now is pretty much the world's reserve asset, but we're definitely, with, if anybody's following this, the war in Ukraine and all the sanctions, and how a lot of people, a lot of countries are not actually obeying those U.S. sanctions, and how Russia has an energy stranglehold on Europe, and China's kind of playing a currency war game with the United States now, using zero COVID and energy, you know, climate change, energy blackouts as an excuse to be able to just stop exporting things that we need here to drive inflation over here and demoralize the West even more. This does not seem like an environment to me, as the more I look at this, as we had in the last 2 years, where they stimulated with $10 trillion and lots of low interest rates and adding liquidity to the system. It does not seem like we're going into the, even if they do another, you know, reversing course and start to lower interest rates and stuff, it almost doesn't seem like we're not in that phase anymore. It seems like we're in a new phase, and I just don't understand how we can get back into the conditions we had 2 years ago to see something like Ethereum go to 10K, like as some people are calling for. Dylan, I'm curious your thoughts, how you're thinking about this. You're paying attention to these markets a lot, and you posted today about how similarly, like, thinking that, like, how do people possibly think that risky cryptocurrencies are going to get a bid in an environment like this?
Yeah, I mean, I think you know, certainly there's institutional interest, even if they're not allocating in size. But at the moment, Bitcoin, ETH, crypto in general trades like a risk asset, and it's treated like a risk asset. It's, you know, it's a increasingly, you know, for the plebs, it's treated as this kind of long-term monetary safe haven. But for institutions, they're you know, just looking to ride the Fed liquidity tide. They're treating it like, you know, they're treating it like a tech stock. And so I don't think anybody is going to come and, you know, if we're at the early stages of a global recession, you know, potentially sovereign debt crisis, you know, these things, there will be a lot of volatility, and, you know, it's kind of, I think it'd be a little foolish to expect Bitcoin or ETH or crypto in general to just, max bid and just kind of, brush off all of the other kind of headwinds that it's facing. The dollar strengthening materially against a basket of foreign currencies. These things aren't really supportive for risk. I think ultimately, like, my long-term thesis is that we're still we're in the concluding phase of this long-term debt super cycle. Debt to GDP globally is 300-400%. U.S. public debt to GDP is over 100%. And these things cannot be solved without financial repression. A decade of yields below inflation is something that I suspect. And I suspect that as we kind of head in towards this slowdown, you're going to have to see the Fed and other global central banks become kind of supportive again with increasing amounts of debt monetization. And that's where kind of risk will do well again in nominal terms. I think in real terms, you're looking at a lost decade probably in equities and bonds. And so, I think Bitcoin's, again, going to be the fastest horse, but it won't happen tomorrow. And I think even next quarter or next year, potentially, and we're due for some chop and, potentially another kind of capitulation leg down. I don't see really the marginal buyer versus marginal seller here. And over the next 6 to 12 months, it doesn't look great. But certainly, 65% from all-time highs, it's starting to look more attractive from an allocation perspective.
I'm still like, what is it? 2, 3, 4% of the world has Bitcoin. Like, we're still so early. It's not cheesy to say that. It's legitimately like we are still so early. But for those of us that are kind of like, Bitcoin is a large or a significant percent of our net worth, it's different advice. Like when I'm talking to somebody, I just met with somebody yesterday who's my dad's in-laws. They're in their 70s, their late 70s. In 1950 or 60, I forget what it was, they built their home and they bought an acre of land for $900. And he saved all of his life and he saved up, a good amount of money for where I am in Cape Breton. It's kind of like an economically downtrodden area, but he saved his whole life. And that money that he saved is just continually weakening. And so he's in his 70s thinking about Bitcoin now, because he's starting to think like, well, if this inflation is going to keep going up and I'm going to keep losing purchasing power and my savings, I need to jump onto something else. So we had this conversation and I didn't feel bad at all about recommending he go in 5 to 10% of his net worth into Bitcoin and save it and like look at it as a long-term savings account. But for somebody like myself, who I'm the majority of my net worth is in Bitcoin, I really struggle with the idea of like, wow, do I want to sit through another 50% drop in the evaporation of my net worth? It's a tough decision for somebody that's like not all in, but like a significant percentage of their net worth to want to recognize the potential for a massive drop in all risk assets and be able to sit through that, knowing that in 10 years, Bitcoin's probably going to be $1 million vying for global reserve asset status with a basket of other assets. I don't know how you guys think about it. Lyn, you gave me some advice on Twitter a week ago. But like, how do you guys think about that? Like for yourselves and for new people coming into Bitcoin? I mean, I personally think it's completely imperative to get people on the lifeboat and get them at least 5% of their net worth in Bitcoin. But how are you guys thinking about this personally? Like, how are you thinking about the next year of your Bitcoin position and hedging it? Like, are you doing hedging or are you just kind of like sitting on your hands? Curious what you guys are doing.
So for me, it's about position sizing. And there's obviously a very difference between someone who just got in versus someone who has a position and then that position appreciated, right? So a lot of people that have a very big chunk of their net worth in Bitcoin, it's not because they put a big chunk of their net worth in, it's because they put a small percentage in and then it grew to a big percentage, which is, I think, easier for them to manage psychologically. Um, One thing I'm kind of watching for, probably by the beginning of next year, maybe, is when the Fed is done with its hiking cycle. And in a vacuum, risk assets can certainly do well when you have the Fed hiking, right? So the whole 2017 Bitcoin bull market, and that was a stock market bull market as well. The Fed was hiking rates that entire year, and all those risk assets kept going up because normally the Fed is hiking in a kind of a strong economy, right? That's when they're usually putting the brakes on, is because things are kind of booming and then they're kind of trying to dial that back a little bit. Whereas what we have in this environment is that they're trying to hike into economic deceleration because of the supply side problem. And so it's a very different dynamic than what we normally see in a Fed tightening cycle. And so I think the key comes down to basically seeing how far they can get I think that the 2 years already giving us some indication of how far they're going to get, which is, a little further than they are now, but probably not way further, before we start to see more recessionary like conditions materialize. So kind of what I'm watching for is that potential, pause or pivot or capitulation. And I think it's not here yet, but it's something I have on my radar. And until then, I've just, I'm positioned diversified to be able to kind of withstand the shocks that we're going to see along the way.
And I think the thing that I certainly look at here is that it's going to get political, right? So a big reason why Jay Powell's being so aggressive is he's had a tap on the shoulder and said, "Hey, see these approval ratings, mate? You got to fix them, right? I need help." So he's in a position where he's basically got to fix inflation because it was the number one issue for American voters, and they're heading into some pretty choppy waters, which is with an election cycle coming up, job numbers are starting to slow down, look a little bit hairy. And it becomes a little bit political when people start losing their job. Now, there's a lot of people who say, inflation affects 100% of people, which is true. And therefore, you're going to have a much larger portion of the voter base saying, fix this particular problem. But at some point in time, there's most likely going to be a scenario where a lot of these supply constraints, the underinvestment in oil and gas, all of these things keep prices not quite, we're not going back to 2% anytime soon. And you're going to start losing jobs. So then you've got a pretty nasty situation where it's like, because when one guy loses their job, they hear about it, that impacts their psychology, and you start getting this negative psychology start to step into the public. And then you start saying, okay, you told us it wasn't a recession. I can literally see a recession in front of me, and my best friend just lost his job, or, my partner just lost their job. Suddenly you start looking at this thing and they're going, hang on a second, and prices are higher. So you move from a situation which is like it's and or, right? You've either got inflation or deflation to a situation where you potentially have both. And the and statement becomes pretty nasty. And I'm Australian, so I look at the Australian market. The RBA is at 1.85%, and I went on any news site you go on, it's I would say 75, 80% cost of living, house price going up. I have to close my business, can't afford my rent. So at 1.85%, the Australian canary is starting to go, shit, we have a serious problem. And the headline is not about inflation anymore. People would much rather pay more for their milk. Unfortunately, it is the higher level of in-debt society on their mortgages. The increasing cost in their mortgage is absolutely maximum pain, at least in the Australian context. So I think Australia is one of these good examples of a kind of a Western nation that's going to be the canary in the coal mine, where the RBA is going to get very, very close to their limit, where people just go, I cannot handle this debt anymore. You're blowing me up, and that becomes the pain point. So there's a political angle to this, which is what is the most painful scenario? Inflation alongside job losses, alongside collapsing narratives of, no, it's not a recession. It's not a recession. It's like, but I can see it. And when the public sees it, that's when stuff starts to get pretty volatile.
I think about this like from the fundamental perspective of like what is being done, who's using DeFi, who's using crypto, and is it legitimate usage, like altruistic, natural usage, or is it only fair weather friends that are just there because they're getting paid to use it? And I mean, Lyn, you touched on this earlier. Like, I think one of the only significant, like, real uses of DeFi is stablecoins on Tron. Like, that's where people in the real world are actually using stablecoins to hold their value because they live in a currency, a regime of like a hyperinflating currency. A lot of people are like, if you go on DApp Radar, you can look at like the top blockchain dApps, and Ethereum dApps don't even make it into the top 10 anymore. Like, it's BSC like games, and it's Wax games and Pancake Swap, and like all these different blockchains. You guys mentioned this both, that like as Ethereum does not succeed at tackling scalability, and it's easier to use Solana or BSC or whatever. Like you guys said, most people don't really care about decentralization when it comes to this stuff, the NFTs and stuff like that, because they're just trying to make some money. This is just like a when money dies situation where 10% of the population is making more money speculating on foreign currencies or pigskins or something than they are going and working and making an income, because the volatility's so high that the currency's dying. seems like that's what we lived through the last 2 years. The growth of DeFi was really partially blown up like a bubble due to the easy access to money that the venture capitalists and crypto funds had. They created this narrative of NFTs and DeFi yield, two extremely overblown narratives that attracted institutional money, high net worth individuals on one side, and then retail on the other side with things like Celsius, Luna, and NFTs. And in this environment where we're transitioning from easy money, global reserve asset currency status is the United States, everything's great, to there's going to be some upheaval and some volatility. I mean, it doesn't seem like a lot of people who are going to be living through recessions and stuff are going to care that much about trying to earn 10% yield in something like Celsius, or trying to speculate on a JPEG or whatever, like all these narratives that made DeFi grow. And I do think that there are some legitimate use cases of decentralized finance, borrowing, lending, exchange, things like that make sense if there's fees generated for you as a decentralized liquidity provider, whatnot, that makes sense. But then you start to value these things more as like companies, like tech companies, by a PE ratio and stuff. So I just don't see how we get back to that environment we had where DeFi summer and then the different layers like Avalanche and all that stuff had these massive, Solana and all this had massive growth. Do you guys see any scenario where you think we get back into that kind of a frothy situation in the next 2 years? Can you see, like, does the Fed completely reverse course, put interest rates to -1, and then everybody doubles their credit card rate, credit card limit, and no interest for 2 years? Like, what could happen to get us back into that crazy alt season type of scenario where we had the last 2 years?
Well, in hindsight, you had, I mean, the crypto bubble and certainly Bitcoin benefited from the flows and the interest and the hype. But Bitcoin and the crypto bubble, it was a lot of borrowed money, and it was a lot of Bitcoin and the crypto assets are reflexive both ways. So DeFi summer, it turns out in hindsight, a lot of it was Alex Mashinsky and the Celsius team just punting user funds into these protocols. We know that was the benefit of hindsight. The layer one trade, Luna, AVAX, Solana, was really just a few venture capitalist firms and 3 Arrows Capital, which in the benefit of hindsight, we know was unsecured loans with user funds from these CeFi platforms, right? Like Voyager. So they were taking $600 million, throwing it in the Luna Ponzi. And that $60 billion of value, like how much real capital was that? And how much did that help support? And then, you think about it, UST, Luna, 40, 50, $60 billion of value. They take Luna, they burn it for UST, they switch that for Tether, and they go buy Bitcoin. And that's, Bitcoin pumps from the Ukraine-Russia invasion, it pumps up to 48K again from a low of 32, right? And so like how much of the whole bull market, and you had Saylor, and for as much as like I actually really align with the long-term view of and Saylor's just kind of ideas. I think like they're pretty directionally accurate. But he kind of sold the vision of like, speculative attack, borrow money, cheap money. And I think that's a good long-term view, but like a lot of people did that. I mean, just anecdotally with the amount of liquidations and just how sharp the two drawdowns were we saw from, summer 2021 and then this kind of recent drawdown. There was a ton of people that kind of like were never expecting 30K again, 20K again, right? And so all of that's been flushed out. So like, what would the chart have looked like if all of that kind of excess didn't actually happen? I mean, no one could have known, but certainly that environment, conducive for risk is not here today. So could it happen again? Yeah, maybe. And I probably suspect there's another round of crypto Ponzi's next cycle, unfortunately. Maybe they're better Ponzi's this time, but like, we've washed most of that out by now. But I wouldn't bet that the irrationality and exuberance doesn't come back.
Lyn, I guess thanks, Dylan. I agree with you there. And Lyn, I'm curious your thoughts on like what I guess I was trying to get at was I think the conditions we're heading into are going to be people are going to want censorship resistant, inflation protection, sovereignty. People are going to care more about money. Like money is the biggest use case. It touches every person on the planet. We all use money in some form. NFTs and all these speculative use cases, in my opinion, it's fine and easy. And when you're in a situation with monetary privilege where you have the ability to go and care about buying JPEGs and earning yield on these speculative protocols, but when we get into this situation where times are hard, I don't think Bitcoin suffers the same problem as crypto and Ethereum and NFTs, because Bitcoin is censorship resistant sound money. It's been like that since it was released. There's been no narrative shift. It's always been censorship resistant sound money, peer-to-peer cash, digital gold. It's been all of those things. And I'm curious the way, you follow Bitcoin's global adoption. You kind of agree on that thesis that if the shit hits the fan, Bitcoin is still going to have a significant role to play in the world over things like the speculative things that are going on in crypto and DeFi?
Yeah, I think directionally, and I think some of it comes down to what happens in practice, right? So if Ethereum gets censored on the protocol level, that becomes a very different discussion than if for some reason it avoids having that fate, right? So basically, people can debate about decentralization until it hits the fan and becomes relevant, right? So you can have two things there where one is more decentralized than another, but it doesn't matter in practice, and people can debate it until one of them gets censored and one of them doesn't, right? And so I think there's that dynamic in play. Looking at broad macro, basically the operating assumption that I'm working under is that, say, the stock market, the S&P 500 or the Wilshire, as a percentage of US GDP, has probably reached a high watermark that we're not going to see for a long time. So at the end of 2021, stock market capitalization of GDP was like 200%, and that was, you had a combination of record fiscal stimulus as a percentage of GDP, at least, since the 1940s, combined with ultra low interest rates. And you had, until the end of the year, you had low commodity prices. And I think that confluence of events is going to be hard to replicate. So even though the stock market might, say, go up in nominal terms, I think that the high watermark of asset values relative to the economy has probably peaked. Now that's not guaranteed, but it's kind of the operating assumption I'm going under, unless I see evidence to the contrary. And I think that could filter down to things like cryptos and things like that, where I think you're going to get, various rolling, enthusiasms and bubbles and things like that. But I'm not sure we would see something as large as what we just saw. Now, maybe in 3 years we'll be in another cycle that's even bigger, and I'll be, kind of basically saying, well, I was wrong about that. But, so it depends on how creative I think some of the applications are. But I think in a broad macro sense, I have trouble seeing at the level of speculation that we saw, towards the end of last year, and, kind of coming back anytime soon.
And yeah, I mean, from my perspective, when I look at two things for BTC, and you'll often hear me say when I'm looking at the data, right? I obviously spend a lot of time poking around on-chain things. Do I see myself in the data? And that's usually a good grounding anchor for me, right? If I see my own behavior, then I start to go, okay, maybe there is actually, there's more me's out there. So when I look at the overall picture, it pretty much aligns with pretty much every bottom signal that we've seen for BTC. But those bottoms take a year, 4 months. It was 7 days in COVID, but that's kind of the outlier in the scenario. Every previous time, it's been on the order of half a year to a year at least in terms of actually forming that low. But during that process, you see people, you see those coins coming off chain, you see them going into cold storage, you see the buyers of last resort coming in. And what a lot of people don't kind of recognize, these things take time, right? Markets are a process, not a result. And it takes a long time for people to actually accumulate and slowly pull those coins off exchanges. Naturally, there's then trading activity that goes on in between it. But overall, directionally, we are seeing a lot of signals saying that kind of cohort is there. And again, we'll bring it back to, do I see myself in the data? I mean, what am I buying Bitcoin for? It's because I'm pretty confident it's going to be around in 10 years' time. I'm pretty confident that it's going to be able to get through this storm, and that its adoption process will continue. So, in effect, relative to companies in the stock market, it doesn't have human overhead, really. It's paying for miners, but a lot of this system is just free market incentives. Are people going to want scarcity through this process? Do I almost have a guarantee that fiat has to be debased? All of these things in that long-term thesis just kind of line up. And the goal is I kind of want to have something at the end of this chaos. And, Bitcoin is one of the few things you can actually hold. And I've been traveling for the last 6 months, and sometimes you think things. You're walking through an airport. It's like, could I travel with gold? No way. You run it through the machine. They tag your bag. Like, what's this? So you can't actually move around if you do want to move country. A big reason why I'm traveling is after 2 years locked inside in Australia, I was like, that's it, get me out, right? So within a week of them opening up the borders, I was out of there. So that kind of thing. What's Greg Foss said, risk happens fast. Things can change in a very, very rapid format, and being able to have that self-sovereignty is essentially my case for owning this thing. Scarcity, the self-sovereignty, the censorship resistance, all of these things, all the reasons why we do, love Bitcoin. It just makes a lot of sense to me in this current environment. And when I look around at the spread of everything else, aside from kind of energy, I still think that gold's got a role in this whole thing. But when I look at all the other things, like what am I buying Apple stock for? Like, aside from narrative and memeability and just like sheer size, like I can't think of a fundamental reason. And I don't know whether that's going to put me on the wrong side of history, and that I typically fall into the fundamentals. I guess you call it value investor framework. I don't know whether the meme stock phenomena is a fleeting event, or if this is our new history where Dogecoin really is the most important thing in the world, and if you don't own it, you're crazy. But I can't get my head into that space because my engineer keeps going, no. You got to come back over here and look at things common sense. And I feel like if there's ever a time we're going back to like, what do people need? What's the actual necessity in all this? I want to get to the other side. I want my wealth to get to the other side. And society is going to need energy on that process. So to me, that's basically Bitcoin, gold, and energy. So right, buy the things that we're going to need and sit tight, essentially.
Okay, so Ed's been active in the chat. He's a big Ethereum fan. Fair point, Ed. He says, "Can you say one nice thing about Ethereum?" Because I asked in the chat if anyone had any questions. This gets to the one of the things I wanted to talk about, which was what is redeemable about Ethereum. Is there something redeemable about what's happened in Ethereum that we should try to bring to Bitcoin, or that we can learn lessons from? You guys want to try?
My very first take is that based on the way the testnets have gone, it looks like the merge is going to be successful. Now, irrespective of the outcome of this in terms of censorship resistance and all the rest of it, what a fucking engineering achievement. I mean, you cannot take away from them that this is an unbelievable swapping the jet engine while it's flying. You've got to give credit to the engineers. It is an absolutely remarkable thing. Yes, it took a long time to build. Yes, they went through the delays. Yes, it's a little bit of a Rube Goldberg machine, but they did it, right? So it looks like they're going to get through it successfully. So, Bitcoiners really can't take that away from them. It's a truly remarkable event. So props to them on that.
Okay, so you're saying we should do a Bitcoin merge?
I mean, you can do it on your own fork, mate, but I won't be mining on it.
How about you, Lyn? You got anything redeemable about Ethereum that you respect?
Lyn, the treasury and gold comparison is really like that you put out last week. I think that's a really great point. It was the first time I had ever thought of it like that.
Oh, I haven't heard of that. Do you want to repeat that one?
Oh, that I pointed out that the treasury market is a larger market cap than gold. But it's obviously a very different market. That basically you can have something that's centralized and larger than something that's decentralized and smaller. With Ethereum, I've steelmanned it in a couple of my articles. I had an Ethereum analysis. I talked about the potential for crypto gaming. I think I even referenced like Pokemon on the blockchain, and then the whole, Axie Infinity kind of blew up, and unfortunately a lot of people kind of got wrecked by that. There's kind of a difference between like in theory, like a play to earn game can be fun, but in practice it almost never happens, right? So it's like, I think crypto gaming is interesting. I think that some version of NFTs probably have legs. But I've kind of just, my steelman for it is that we know that decentralization, we know that centralized databases are important. So things like Amazon or Twitter and just all the services we interact with. We know that decentralized databases are important. That's Bitcoin, something that's totally, on its own. And then the question becomes, is there a role for federated computing? Is there an application where you would want, you don't really care about true decentralization, but you might want a number of different entities to be able to audit it or have to agree on its state or something like that. And you can imagine how maybe certain exchanges and things like that could make use of that type of technology. So, I never really railed against its existence. I only kind of debate when I see the ultrasound meme or kind of
Yeah.
comparing it to the validity of Bitcoin as money. So for me, I kind of categorize it as a type of equity, and kind of like how, say, the more iPhones that Apple sells, the more of its shares it can buy back, right? And therefore, kind of try to increase the per value of its shares. You have a similar dynamic in smart contract blockchains, where if they can attract users, and they can get a fee market, and then they can use that to burn some of their tokens, you get that kind of that dynamic going on in a very similar way that you'd have in any sort of like equity like ecosystem. So I don't really it's just I don't view it as the biggest problem to solve. So it's
Right.
been less of an interest in me. And that's why I only do these things occasionally, where I talk about Ethereum, because I don't want to be like the Bitcoiner that's always talking about Ethereum, for example. It's relevant in this period because of the upcoming merge. And so it's something I'm willing to weigh on here, but that, I kind of just go back to focusing on things I'm more interested in.
Preston Pish had a good take on it too. His thought was he's unsure of the policy risks. And there's so many policy risks with Ethereum, the platform, and ETH, the asset, that he just doesn't want to focus on it. Like he did a dive into it. It's not for him. He likes Bitcoin. It is provably censorship resistant, decentralized, credible monetary policy. You can run a full node. The Lightning Network is scaling. All the things we love about Bitcoin. And then, people constantly ask, well, what about Ethereum? What about Solana? What about blah, blah, blah? So, yeah, I like your take, Lyn, and thanks again for joining us on this one to give your analysis on it. It is definitely a relevant thing to talk about at this point, because I remember the only time I've ever been concerned about Bitcoin was November 2017, when we weren't sure whether or not the SegWit2x fork was going to happen. And Bitcoin Cash at that point was attracting a lot of the miners, and there was a significant price pump of BCH on Coinbase and one of the Korean exchanges, and a lot of the hash rate moved over, and there was a potential that there could be a chainsaw attack from the Bitcoin Cash miners and the big block miners. And if they had gone through with SegWit2x, it would have been insane. It would have been crazy. So that was the only time I've ever been kind of nervous about Bitcoin. And now I'm not at all, but this is definitely an interesting time in crypto history to see Ethereum having all of these problems with censorship, proof of stake, like the staked ETH drama, the collapse of all these DeFi Ponzi schemes and everything, all happening all at the same time in this crazy macro environment. So anyways, Dylan, thoughts on positive, what can you say good about Ethereum?
Yeah, I mean, I just would say that, there's, the bull case is that there's room for something like an Ethereum in the world. I mean, that's obvious with just the amount of stuff that's happening in the crypto space. People are building on it. People are using it. Is the value fleeting or not? Anyone knows. But I mean, I'm, like I said before, I'm kind of a libertarian anarcho-capitalist. Like, if you want to build things, build it. No one's stopping you. And I'm certainly not rooting for anyone to fail. Like if they pull this off, like Jack said, an amazing feat of engineering and proof of stake works, and they build something that's lasting and decentralized that I can, use to borrow against my Bitcoin in some sort of federated way or whatnot, like that's cool, right? And I've used the DeFi protocols as well. I've used all the stuff. Like I've played with the tools. I've, tried AVAX, I've tried Solana, I tried Ethereum. I haven't bought any NFTs, but I've tried the tools because I want to understand them at a technical level. So yeah, I guess that's what I would say. Don't really know if I have too much more to add, though.
I mean, I would probably just one more layer to this whole thing, which is where I think Bitcoiners have an enormous blind spot. And it is because we essentially, many of us have been calling everything that's not Bitcoin a shitcoin for years. And the sad reality is that a lot of this stuff does have demand, and we have not been there for the lessons learned, right? So I've watched DAI break to the upside, break to the downside. I've seen Oracle hacks. I've seen shit blow up all over the place on DeFi. And most Bitcoiners just write it off and say, oh, look at this scam over here. Well, sorry, folks, but you've got 2.5% of all Bitcoin supply still in wrapped Bitcoin, even after this whole bear market. So you can go and argue that there's no demand, but there is. So the problem is we need to build out a lot of this stuff because Bitcoin has the same issue, right? We need to have this censorship-resistant financial infrastructure. Otherwise, you're no better than having Binance as your ultimate CEO, right? Because you have to go through an intermediary to get in and out of this thing. Let's not kid ourselves. I appreciate all the no KYC thing, but 99, again, the same way that stake will centralize, the same reason that 99.99% of Bitcoiners are going straight to Binance and Coinbase. So it's a cute platitude, but it's not real. So sadly, a lot of Bitcoiners have not been around for the DeFi experiments. They've not seen what worked and what didn't. And it puts us on the back foot. We need to, again, I'm not saying that we need to build all of these things, because there's a lot of stuff that just doesn't need to exist, but there's stuff that does. And there is demand for it. So we're kind of behind the ball on that, in that we haven't actually paid attention. We haven't seen the failing mechanisms. And what that sadly means is we're probably going to make a lot of them ourselves. We're going to have an oracle that's going to go wrong because we didn't spend time studying how Compound and Maker did it right. We're going to see things blow up and pegs fail because we didn't realize how the pegs were structured and what worked and what didn't in previous iterations. So that's one thing I would probably implore to Bitcoiners, is that having the closed-minded view where everything else is shit is just it's a position of ignorance. And whilst you may not agree that some of these things are useful, we can learn a hell of a lot and still build the lower time preference Bitcoiner version of it. But you're going to make a whole lot of mistakes because you didn't learn from what the other guys were doing. So there's a bit of a trade-off there, but it's going to be a fun road.
I like to, about a year and a half, 2 years ago, as I was playing around with DeFi initially during DeFi summer and like setting up with all the, BSC and ETH and MetaMask and all this stuff, I tried to consciously change my description of how I criticize this stuff from, oh, that's a scam, like that's just boy who cried scam, it's not effective, to actually being specific about what's wrong with this. And most of the time it's just way overvalued. Like most of these coins are just bolted on extraneous tokens that are rent seeking and don't have any real fundamental value. But that doesn't mean they're a scam. It doesn't mean that it's a, like you can choose better words to criticize. I totally agree with you there. But, honestly, I've been doing that for a long time, and I still get called out like as a Bitcoin maxi, toxic, doesn't know what he's talking about, Luddite Bitcoiner. Nobody cares the way you do. Like if you're in crypto or Ethereum or DeFi or whatever, just look at the comments of this video afterwards. It's just people like, you don't know what you're talking about. Ethereum is ultrasound money. Bitcoin is an unproductive asset. People just have their tribalism wired right now. If you're holding a bunch of ETH, then Bitcoin maxis don't understand Bitcoin. So even if someone like me or you, Checkmate, or Lyn or Dylan, like we try to be nuanced with our criticisms, I just find that it's just continually hit with like, you're just a Bitcoin maxi. And even though it proved to be true for a lot of the stuff that was not as secure as they thought it was centralized, it's way overvalued as an investment, still you can't win, I find. And that
so
just
Brad,
comes
I
back
think
to that.
You're making the perfect case for why recently I've been on a campaign saying the toxic maximalists, whilst I'm glad they exist and they always will exist, you're completely ineffective. Because what you've essentially done is by calling everything a scam, despite the fact that there are some things that are not scams. Maybe it's not the best analogy, but it's a boy who cried wolf scenario. You allow the Lunas to exist because everyone goes, oh, those maxis just call everything a scam. And they discount everything that you say because you have no nuance. Now, again, the memes are fun, all that kind of stuff. I get it. But you're completely ineffective.
I think that's too far, though. I think that you can't say that we allowed Lunas to happen, because no matter what, crypto is gonna, like, scams are gonna happen. And that's something that I struggle with too. Not as much, but some people are like, they criticize us for calling out Ponzi schemes and saying like, why are you doing that? But why
Brad,
are you calling out the Ponzi scheme?
Chairs are a Ponzi scheme. Cars are a Ponzi scheme. Like the joke is that everything is a Ponzi scheme. So therefore, when an actual Ponzi scheme shows up, people are like, it's just an idiot maxi. So you've essentially diluted the message so much that it's meaningless, right? I think
it's more on the onus of the cryptocurrency influencers to call out the legit Ponzi schemes, because Bitcoiners are doing it constantly. For sure, there's boy who cried scam effect, where we're not as effective sometimes because crypto people will look at us and say, oh, you think everything's a scam. But then there's so many things that blew up this year that was obvious in hindsight that it was a scheme or like a pyramid scheme or just a just nonsense investment that was going to get people wrecked, risk-free yield and all this stuff. that wasn't being called out enough. But again, I think that comes back to one of the main points of the conversation is the cultural differences. And it's tough to reconcile it because if you're on crypto side, you look at that as like Bitcoiners are anti-capitalist or something like that. Like we're against innovation. We're against experimentation. But when I think we look at it as like, this is an obvious bad investment, it's obviously going to fail in terms of like getting tons of people wrecked. And the only people that are going to make money are the insiders and the VCs that are going to dump everything on the waves of plebs that come in and try to get rich off it. So do we criticize it? Do we not criticize it? I don't know.
I mean, again, and this is what I tried to do with the video, right? If you're going to criticize it, do a good job of it. Get the nuance, understand it, unpick it, and be undeniable, right? If you just bang on and say, oh, it's a Ponzi because this guy has 30% of the supply, it's like, okay, but what are the impacts of him having 30% of the supply? What are the pros? What are the cons? The challenges at the maxi argument, you can be so much more damaging, right? You can be so much more irrefutable and actually stop people investing in the scam if you make it so unbelievably undeniable. Get the points out there, make a really coherent argument, just do a better bloody job, and you'll actually avoid more scams. If you actually want to achieve the goal of getting people to invest in Bitcoin because they've recognized that these things are Ponzi schemes, then call them out properly. Don't just yell and scream on Twitter. Again, it's a social media thing, but do a good job, make a very good case, understand how these things came to be, and argue it from a fundamentals perspective so people can't argue. If you can't refute, this is the challenge I'm having at the moment. And again, maybe I just haven't found the right Ethereum, but I'm struggling to find someone to come up with a good argument. So the challenge there is that there's a whole lot of people going, holy shit, he's struggling to find someone who can come up with a good argument. It goes against all the things I've been told by the promoters previously.
All right.
Who's doing the risk tolerance here? So essentially, that's the most effective argument, is just be undeniable. Yelling and screaming on Twitter is never going to achieve anything, as fun as it can be. The better approach is actually to understand the product, understand the pitfalls, and have a bloody good argument that no one can argue with.
Dylan, Lyn, curious on your take on that. Is it Bitcoiners' fault that Luna exploded? I'm just kidding. Checkmate. That was not
yeah, well said, Check. No, I think I don't really have much to add there. Brad, I got to head out. I got an all hands meeting here in about 5 or 10 minutes, but appreciate you having me on. It was definitely a fun rip, and I'll
man, I appreciate all the work you've been doing, and keep up the good work, man. I wish I was that smart when I was young.
Cheers. Lyn, Check. Have a good day, guys.
Good on you, folks. Thanks, Dylan.
Yeah, and I've actually got to head out too, unfortunately. But I do think that people that are critical of different projects should be specific, right? Because not all projects have the same level of critical flaw, right? There are some serious attempts out there. There are other things that are obvious Ponzi's. And so I do think that people should be articulate with what exactly they disagree with a given project, to the extent that they even provide analysis on various projects. So yeah, with that, I got to head out, but I appreciate the discussion.
Thanks very much for joining us, Lyn.
Thanks, Lyn.
Bye.
What do you think,
Cool,
Check?
mate.
You want to go a little bit more, or you want to call it here?
Oh, mate, look, I'll stick around if you've got any specific questions. We've got 15 minutes till the top of the hour. So, if there's any particular things you want to talk about,
yeah, let's talk about, so from the regulatory risk perspective of Tornado Cash censorship and dust attacks, is there any serious threat there from, say, like an Aave liquidation engine failing because somebody dust attacked Aave's liquidation addresses, or some debt holder in MakerDAO, or a debt holder in like the staked ETH, the like looping problem that was happening with staked ETH, where people were leveraging on Aave and taking a long bet on the Ethereum Merge through the staked ETH. What if somebody dust attacks all the debt holders, or the Curve Vault or something like that has the staked ETH and ETH in it? Like, is there actually a real threat to complete failure of these protocols to be left with bad debt because of OFAC's sanctions and regulatory?
It's a really challenging problem, and this is it's one of those things that you try and reason about how all these things play out. So let's start with what actually happened. Right, someone dusted a bunch of .eth accounts with 0.1 from Tornado Cash. Now the challenge is, let's just take it to a UTXO model. Right, if you're a UTXO model, you receive some tainted coins, you put that UTXO over there, and you carry on with your business.
Right.
If you've got 10 ETH and you receive 0.1 from Tornado Cash, Which 0.1 was it? The second that you spend it, I mean, it depends where you are in the world, but it's a little bit hairy. So realistically, and Nick Carter was talking about this on his podcast, I think it's a valid take. If you receive 0.1 ETH from Tornado Cash right now, I'd be getting a letter from a lawyer to prove that you didn't do that, right? Somehow you've got to prove it. You've probably got to segregate it. The account model makes it much, much harder.
Yeah.
As you mentioned, they could also dust smart contracts, right? What happens if someone pulls, 100 ETH out of Tornado Cash and sticks it into a Uniswap pool? You've essentially now mixed that 100 ETH with all of the ETH that's in that pool. I don't know, actually, to be honest, what the answer of that is. But this is where as an engineer, I look at what could the risks be. Is it plausible that because that 100 ETH is now laundered through Uniswap, which one is it? You could argue that only that particular account can withdraw it, but there's impermanent loss. So in theory, as price changes of ETH, you're essentially distributing that ETH into the market.
Oh yeah, you're mixing it through the liquidity pool.
Talk about how confusing that is, and this is why I say to Ethereans, like, don't kid yourself. You are disrupting money and banking, the two biggest industries and power plays in the whole world. So if you think they're just going to let you go, I think you're kidding yourself. So it's a very, very interesting dynamic where, I mentioned at the start of this call, one of the big risks is what happens if they do say, all right, this unregulated banking system, this Uniswap thing, this Maker thing, it's allowing people to pull stuff out of Tornado Cash, launder it through these processes. I mean, it's tough, right? You start getting to this position where you can actually, these systems themselves, the contracts themselves, and that's why the Tornado Cash thing, it's why I say to the Ethereum community, like, this is new information, right?
Yeah.
It doesn't really matter what you may or may not have thought of before. This is new information. So we now need to look at it and go, has this changed the game? Has it changed our assumptions?
I don't think that it's new information in that a year and a half ago, I mean, when I saw that DYDX and 1inch both started to add disclaimers on the front end interface that you are not going to use this if you're from the United States, and Uniswap released V3 with a corporate license, and I think it was Curve voted to like censor USDN. It was like this scammer had gotten control of some of the governance or whatever, and they censored him, and the team actually just used their admin keys to just sort of depeg his coin and wreck his coin so it wouldn't have as much vote weight in the protocol. I think it was Convex or Curve or whatever. There's been so many examples of these protocols actually just being LARPing as decentralized.
Yeah.
And like,
even
it was
the Oracle
clear
failure, right? If someone blows out the Oracle on, and it's actually why of all the protocols it kind of makes sense. Compound is a good example because they understood the Oracle risk. Eric Wall's written about why Chainlink is not actually cryptographically secured.
Right.
And all that kind of stuff is a bit of a Ponzi.
That's a separate thing though. Like that's Oracle's
there's multiple
separate.
There's
so many risks. Yeah, there's so many risks.
Blows up.
But on the censorship side, like what's recently happened with Tornado Cash and OFAC, I mean, the signs were clear that this was becoming very centralized. Silicon Valley venture capitalists and Wall Street investors and banks were all getting involved in DeFi. Coinbase Ventures, like all these US-based venture funds were all backing all of these big DeFi protocols, and they have to abide by US regulations. So anybody who didn't see the writing on the wall that as the government was going to have to make a decision about DeFi and stablecoins as it became bigger and bigger and bigger, and like I've been saying this for over a year now, year and a half, like, do you think that the regulators are just going to bend over and hand the keys to the securities market and the money printing to the Silicon Valley venture capitalists and the Wall Street quants and just say, here you go, guys, disrupt us? No, of course they're going to use their power of the state to bear down on them, and they're either going to co-opt it, capture it, or censor it. And
well,
so
I mean,
this is the state we're in now.
It comes down to like these risks do exist, and someone raised on a calls on the other day that there's a lot of vested interests in keeping ETH decentralized, and they referred to the VCs and different entities that have been involved in obviously building out the infrastructure. And I said, no, that's why there's a risk, because those vested entities, as you mentioned, are going to be regulated. They're not avoiding OFAC, and if the writing wasn't on the wall, when you see what happened with Tornado Cash, I mean, what was it? It was a day. Aave was blocking certain addresses. There was a whole suite of things, right? Front end started closing down. Now, again, understand, and it's important to distinguish that both the Ethereans and the Bitcoiners' take on this was dog shit. Bitcoiners were saying, oh, look, you censored the protocols. No, the Ethereans are correct. They censored the front end.
Right.
They didn't censor the back end.
The real test.
But hang on, but Ethereans are incorrect because go and spin up your own front end, to which no one can. So
no one's going to use it. Yeah.
You're both wrong, and it is a problem, right? Irrespective, because the user experience of me downloading an Aave front end is, first of all, 100% probability you're going to have bugs in there. Someone's going to steal your coins, right? Someone's going to put a scam front end. You download it, you upload it, bang, your coins are gone. So the amount of risk and just the user experience, I mean, you can't scale when you have to write your bloody own transaction and put it into a smart contract. That's just not going to happen. So both sides are actually wrong on that in terms of the quality of the takes.
So I don't actually think the big risk is somebody dust attacking the protocol or like the large debt holder. I think maybe that will be the same risk as like a forced depegging of a stable coin to like, you know, how they were removing the other stable coins out of the curve pools, and then they were like mass selling that stable coin. So it would create conditions to create a depeg event, and then somebody can profit by going short on FTX or something like that. I think there's probably an opportunity for somebody to make some money by doing like an attack on Aave or like a staked ETH or something by dust attacking all of the staked ETH debt holders with Tornado Cash. So they all get locked at once, and then somebody does a mass sell and it depegs and they make a bunch of money off of that. But I don't think that's a long-term threat. I think like we're still, it's very clear now that that the regulators are going to make these calls on like taming these markets.
I would say that what you're describing before is like, you know, it's a market force thing. If a bunch of people get liquidated on Aave, Bitcoiners have a laugh, whatever. It's part of it's part of our day to day.
It's not long term.
No, exactly. What's more important, and really the only risk that I'm trying to outline in that video is basically saying, look, you mentioned it. The government's not going to let you take money in banking. Just walk in and be like, yeah, we're 29-year-olds. You know, give us the field. Like it's just not going to work that way. If you don't think they're going to, and they put this poor bugger in jail, right? He just wrote code. They're going to go to extreme lengths. Right. So you just, the threat model is there. And that's why I bring it back to the original question we started with this call with. Are you improving your situation going from Ethereum proof of work to Ethereum proof of stake? Does that make you more or less censorship resistant? And the reason why that's an important question is because censorship is coming, right?
Yes, 100%.
How can you live through the last 2 years of our life and not realize that censorship is coming in a very, very big way? And my big argument is, if you think you're going to coordinate a UASF that the government wants to stop, good luck doing it on social media. Like, it's just not going to happen, folks. And
in a system like ETH, it's impossible. It's already been so influenced by venture capitalists and Wall Street and people that have made tons of money already. They've made billions of dollars off of DeFi already. Why are they going to risk going to jail by upholding cypherpunk values?
Let's play through the scenario, right? Maybe this is the right place to close, but let's play through the scenario of what happens if they do a UASF. So let's imagine Coinbase and Binance and all these guys have to censor. They have no choice. They can start exiting staking pools and all that kind of thing. But let's imagine that they start censoring, right? Out of necessity, for whatever reason. This is essentially the UASF case, right? If you're going to pull out this weapon, this is what's going to play out. The 33% of solo stakers, at least in the position we're in at the moment, the 33% will slash Coinbase. Coinbase and USDC will say, well, we have to be OFAC compliant, so we have to slash you. You get a splitting of the chains. The 68% chain with Coinbase, the OFAC compliant chain, USDC is worth $1. DeFi is stable. And little Timmy is fine. He's got all his money, but all the bankless bros are completely slashed, right? So they're not going to want to be on that chain. And the devs have been quite explicit, rightfully so. We will not support censorship. So the devs and the solo stakers are on the left-hand fork. Everyone who's compliant on the right-hand fork. On the left-hand fork, they've essentially got their USDC goes to zero. So they need to get off USDC if they want resilience, because all of their DeFi positions are going to just implode. So now you've got no DeFi positions. You have all of your ETH and you've slashed little Timmy, but little Timmy's got twice as much ETH on the OFAC compliant chain, and he's quite okay with KYC. He doesn't care. He just wants number to go up. So now you've got a situation where you have quite literally forked your community to where the little Timmies, who are the majority and arguably consensus, because you gave the keys away, it's too late. Because you've fractured your network. You've now got a Ethereum Cash and an Ethereum. We don't know which one's called which, but the exchanges can't agree to one of them because they're not OFAC compliant. So you just lost all your exchange liquidity as well. They can't even list ETH Dev, right? They have to list ETH OFAC.
Well, that's why, dude, I don't think it's credible at all.
I don't believe it's credible. And I think this, like, of all the things, the only defense that has been mounted against this scenario that I laid out in my thesis is essentially a UASF. That's why people are talking about it, right? Because that's the impetus. I think that you're kidding yourselves. And that's the crux of it. And that's the thing we can all debate about. But I really would love to hear any debate to say why that UASF is a feasible, credible solution. When you map out and play it through, everyone loses, which means it's a shitty situation. And they'll,
what a mess.
The argument from the Ethereum devouts will say it's a worthy sacrifice to slash little Timmy and to do all those things for Ethereum survival, which principally is correct. But how about you just not get yourself in that situation in the first place? And the way I believe that you do that is by just not doing proof of stake, because you can recover from Aave centralization, you can recover from USDC centralization, all the shit we've talked about, all the shit that Bitcoiners yell and scream and say, oh, look, you're centralized. You can get off that. It's going to take time. It's going to be painful.
I mean, dude, I think it's a fair point for sure. And I think you know this, that they're not going to switch off proof of stake. They're going forward with proof of stake. It's been the marketing material. It's like 2 years of pumpamentals here. They've been raging against proof of work, how it's killing the environment and boiling the ocean. They fundamentally,
the amount of people who've told me that that's not a momentum for it, like the amount of people who are saying, oh, you keep banging on about ESG as a case for proof of stake. I said, hang on. My slides, my second or third slide says the case for proof of stake: sharding, environmental, Ethereum.org website. Sharding,
I know, yeah. It's
environmental.
It's definitely part. It's a significant part of it. It's definitely a significant part of it, and that's why I think there's just irreconcilable cultural differences between Ethereum and Bitcoin. We value different things fundamentally, and we are willing to accept trade-offs in certain things like scalability of fees on Bitcoin on the base layer for ultimate censorship resistance and decentralization and sound money. And like, I would have loved if someone had rescued me from the Mt. Gox hack. That would have been amazing. Like, a lot of Bitcoin was lost in the Mt. Gox situation, but I actually prefer that I lost a shitload of money off that, because it shows the world that, like, there's nobody going to come and rescue you in Bitcoin. It is sovereign, censorship resistant digital gold. Nobody can change it. So there's value of having something where you're going to get saved in the world, for sure. We know that. But I just, even if they don't switch to proof of work, I mean, if they don't stop the proof of stake switch and they stay on proof of work, I think there's still a lot of things that will retain centralized and lacking censorship resistant, if they even decide to can proof of stake. It's just, I think it's corrupted at the core when it comes to
so that's where I would disagree. I think that they can recover from the other issues. It'll be hard, and they probably won't, right? There's what they should do and what's reality. But I believe
but the end game is the same. I think the end game is the same. It's like,
it might be. It's hard to tell, but
I like where you're going with it. I like this discussion. I like your video. I love like the logic you're saying, but I just think it's already too late. And whether it's proof of stake or proof of work,
and that's why I say in the video that it's possible, right? I wouldn't assign 100% probability that it's already captured, but it's definitely not non-zero, and it's probably close to 10%, right? So again, you look at expected values of these things. My argument is that there's probably a 10% case to say that it is too late. But there's also a 90% chance that they may be able to get off it, as painful as it may be. So they may be able to replace USDC.
Yeah, but dude, like, even if they get off proof of stake, and they would have to completely screw over all the U.S. venture capitalists, JP Morgans, all these Wall Street bankers,
but
all these market makers.
Give them the credit where it's due. Their stated goal, and again, go and listen to the old core devs from yesterday. their stated goal is that developers are saying if they censor, then I'm out, right? They're basically saying that it's all or nothing. You're either censoring the protocol and you lose all the devs, which is the fair position to take. You may as well go do something else, or you stay censorship resistant. So as a result, like I believe that they're being quite serious when they say that they will uasf, and I believe that in that circumstance they will do it, and I believe that they will do it the same way that Bitcoiners will go to the end of the earth to protect Bitcoin. I think the Ethereans will as well. I'm going to give them that credit, right?
I seriously doubt it.
The challenge is that they're going to probably leave most of their investing community behind, and I believe the network effects will die. But I do believe that they will still go down that route of actually forking it.
I would respect them a lot more if they actually stick to their guns with that,
Yeah.
and they actually have principles there, and there's like prove that there's cypherpunks left.
And I guess
Ethereum.
at the end of the day, and kind of, I think this is probably the final point. I believe a lot of this is just avoidable, right? And as an engineer, when I look at this situation, I can see a risk that could be mitigated completely. And I also see a community that doesn't understand proof of work very well.
Mhm.
They don't understand where their miners are. They don't understand the jurisdictional risk of their miners. And I think they have mispriced and misunderstood the censorship potential of proof of stake. And again, the fact that they're talking about it is a good sign. But it also, the fact that they're saying we need to ship withdrawal code ASAP is telling me that there's something there that they have recognized, but ship the withdrawal code first, reshuffle your stake pools, then merge.
But Checkmate,
they don't want to mitigate the risk. And that's the concerning part.
even if all of that is true that you're saying, and if all of that happens, and they stay proof of work, and they are cypherpunks, and they want censorship resistance and decentralization, it still doesn't prevent the U.S. government from hauling in Joe Lubin and Vitalik into Congress and saying, fork out Tornado Cash protocol at the protocol level, censor the protocol, otherwise you guys are going to jail.
Yeah, but I also think that the community would just say stuff you to Vitalik, to be honest.
I don't think they would. I mean, that's the true test of Ethereum's immutability.
Here's where I disagree. I think they would fork out Vitalik, but I don't think their network effects will follow them. So essentially, this is what I'm saying. It's basically, even if they do it, like, let's give them the benefit of the doubt. Because again, what is the most optimistic scenario? The most optimistic scenario is that they do in fact follow through on all of their threats and they are credible. But the cost of it is probably going to be you lose all network effects. So therefore, if your best case scenario, if your best case, most optimistic scenario is a loss of network effects, you should probably be mitigating this risk before it comes to the table. That's really, at the end of the day, that's the crux of my argument. Mitigate it first. Put your pride aside. If the thing that's stopping you from actually just taking a step back and reassessing the risk of censorship and all these different things is a bunch of Bitcoiners having a yell and teasing you online, then harden up and protect your $230 billion network. Get serious about this. But the response I've basically received is to me, at least from my uninformed perspective, they don't seem to want to hear it. And I think Lane Reddick put out the correct tweet to summarize this whole thing. Ethereum has made the bed, and it's basically time for them to lie in it. And we will find out whether our models, right? Because again, this is all just a model. We will find out whether our models are correct or not in the real world. So they're probably going to get battle tested. I hope they've sharpened their spears because they may need it. And Bitcoiners need to sharpen ours as well, because you better believe that the second this happens, the environmental FUD that is coming for us is going to be immense. So prepare those spears. And again, for any Bitcoiner that's listening, being a toxic idiot is great and all well, but it's not going to be effective. Be undeniable, have a better argument than everybody else, and put forward a case that you cannot dispute, cannot be argued against, because then you win. And where you win is you win the mind share of everyone who's watching the conversation. That's where you actually make the biggest impact. You're not going to stop scams by just calling it a scam. You stop scams by showing that it's a scam, undeniably.
I like to say, embrace maximalism, reject toxicity.
I'm with you. I think that's the right way to do it.
I really appreciate the work that you're putting into analyzing all this stuff and the videos that you're releasing and stuff. It's been great reading your threads for the last 6 to 8 months on everything from Terra Luna to Celsius to the upcoming merge. And I can't believe I didn't follow you before that. I didn't catch your initial.
So the amount of Bitcoin maximalists who have unblocked me this week is out of this world. The amount of threads that were just block, and suddenly I can see it's like the windows have been opened up. So I obviously struck a nerve somewhere.
I kind of suffered the same thing, you know, when I was experimenting with DeFi in 2020 and then in 2021, and I was talking about like Ethereum's Lindy ceiling, the high fees of being a Lindy ceiling, and how Solana is going to benefit and BSC is going to benefit. Bitcoiners didn't like me talking at all about NFTs use cases and DeFi use cases. So I got looked at like, oh, I'm too much of a Bitcoin maximalist for my shitcoiner friends, and I'm too much of a shitcoiner for my Bitcoin maximalist friends. I think we're in the kind of a similar boat, but anyways, I really appreciate you posting all that stuff and putting all this effort into trying to engage like intellectually, honestly, and have a nuanced take on all this stuff. We may not see eye to eye completely on everything, but really enjoyed chatting with you. Hopefully we can do this again sometime. And thanks for coming on Magic Internet Money.
Good stuff, Brad, mate. Enjoy the rest of your holiday.
Thank you.
Cheers.
All right. Thanks everyone for watching. I'm going to hit the end button here. Great podcast episode there with Lyn Alden, Dylan LeClair, and Checkmate. If you guys would love to get really good Bitcoin content, I'd suggest you subscribe to Lyn Alden's Twitter, subscribe to Dylan LeClair's Twitter, and also Checkmate's Twitter. I'll leave their handles in the show notes. And also always recommend that he doesn't sponsor my podcast or anything, but Preston Pish's podcast is amazing for anybody looking to get great information about Bitcoin and macro markets. And you know, he's Preston Pish on Twitter. Really good chat with these guys. And yeah, I guess you could follow me as well. And if you like the podcast, give me a review. ratethispodcast.com/Bitcoin. Let me know if I'm coming through clearly. If you have any suggestions for guests or anything, I always like to hear from people. Reach out to me on Twitter at BradMillsCan, or yeah, leave me a review. ratethispodcast.com/Bitcoin. All right. See you later.